Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us here at AusBiz in what is expected to be a fairly thin traded day, locally at least, given half the country is on holidays to mark Anzac Day. Well, let's check in on what happened on Friday on global markets. Mixed as investors remain cautious with little progress made in resolving the war in the Middle East. However, on Wall Street, the S&P 500 and Nasdaq closed at record highs on positive earnings results and expectations of a new round of talks between US and Iran and Pakistan, which President Trump subsequently called off. Now, for the week, the S&P 500 gained 0.5%, the Nasdaq rose 1.5%, and the Dow fell almost 0.5%. Intel shares surged to close at a record high, following a better than expected revenue forecast for the second quarter. Other chip makers, AMD and ARM, both rallied, while Nvidia closed at a record as it neared $5 trillion in market valuation. More than one-third of the S&P 500 is set to post results this week, including Microsoft, Alphabet, Amazon and Meta, with investors focusing on their massive capital spending plans to build out data centers and other infrastructure to support AI, while Apple also reports as it transitions to a new chief executive. Newmont shares surged after it beat Wall Street's first quarter profit estimates as record gold prices helped offset lower production, though the world's largest gold miner warned of lower output and elevated costs in the current quarter. And shares in oilfield services company Baker Hughes rose sharply, as it said it's seeking to recover higher costs from customers after the war in the Middle East and the effective closure of the Strait of Hormuz disrupted global supply chains. Well, a manifesto of the accused gunman at the Washington Hilton, where President Trump was attending the White House Correspondents Association dinner, has revealed a list of targets, including Trump administration officials prioritised from highest ranking to lowest. President Trump has said the manifesto was anti-Christian. And the incident on Saturday night overshadowed developments in the Middle East, with President Trump saying the following day that Iran could telephone if it wants to negotiate an end to the 2-month war. Hopes of restarting peace talks receded over the weekend when the president scrapped a visit to Pakistan by his envoys Steve Witkoff and Jared Kushner. Now, in the latest US data, consumer sentiment fell to a record low in April as the war with Iran fanned inflation fears, according to the University of Michigan survey. But as a measure of consumer expectations for inflation over the next year fell slightly from 4.8% to 4.7%. US Treasuries firmed on Friday on the prospect of renewed peace talks, the 10-year falling to the yield there falling to 4.3%, the 2-year down to 3.77%. The US dollar index fell, pressured in part by the Justice Department's decision to close its investigation into Federal Reserve Chair Jerome Powell, the decision helping clear a path for the Senate confirmation of Kevin Warsh by May 15th, when Jerome Powell's leadership term ends. The Aussie is trading at 71.4 US cents. Oil prices whipsawed in volatile trade on Friday, but were higher on the week as traders await supply disruptions against potential restart of those peace talks that could limit the disruptions. So Brent crude futures settling slightly higher at $105 a barrel, I should say. It's having gained 16% across the week. Gold rose, but was on track for its first weekly loss in 5 weeks as lingering inflation concerns and the uncertain state of the war in the Middle East keeps markets on edge. Spot gold trading at around $4,700 an ounce. Copper was off around 1%. And Bitcoin is currently trading above 78,000 US dollars. Let's turn to India. An aviation boom is creating a powerful long-term growth story there, even as recent volatility hits the sector. Let's get some greater detail. Mugunthan Siva is joining us from India Avenue Investment. Mugunthan, good to see you.
Likewise, Andrew.
Aviation in India, so I gather more Indians than ever before are taking to the skies.
Yeah, well, if you run a simple comparison of, say, IndiGo, which is the largest market share in India of just over 64%, to Qantas, which also has about 60%. In Australia, there are 55 million passengers a year, which is about twice the population. In India, it's about 120 to 140 million. So you could see that that's just less than 10%. So that's really, I suppose, where we're going to from here. Obviously, Australia has a much higher GDP per capita, but in India, the addressable market is just started to grow.
All right, so what is the growth potential there? Then clearly, I guess, as the middle class becomes wealthier?
Yeah, correct. So the passenger growth is about 10 to 12% per annum. That doesn't sound necessarily, something that's alarmingly high, but IndiGo has been a company that's been capturing most of that growth through the structure of their business.
Now, IndiGo being, we've just got the share price there of the parent company being InterGlobe.
Yeah.
All right, so what does that tell you then as to the growth we've seen, particularly in its share price, and perhaps where to from here?
Yeah, so it's had extraordinary share price growth after a difficult COVID period for most aviation companies. Last year saw some, you could say, technical glitches and issues for the company, and that's been compounded into this year's rising oil price, falling rupee, because most of the company's debts are lease obligations in US dollars. So those things, and just talking about last year's technical issues, essentially there were two issues. One was one of the planes got grounded as an emergency. That was related to a Pratt Whitney issue from Airbus. IndiGo is about 10% of Airbus's order book. They're their biggest customer. So a lot of the aircraft they had, up to 70, were grounded. That issue has been improving. And then we saw regulatory issues change in India in terms of labour laws, where pilots were, they had to ensure that pilots had enough recovery time between flights. In a company like IndiGo, you're trying to get a plane in the air 6 times a day and use as many of the hours as possible to gain maximum efficiency and operating leverage for your low-cost structure. So, these things have operational impacts on a company that's trying to, go skirt the line in terms of how efficient it is.
That sounds as though they're potentially caught in a disaster there. If you're looking for those such incredible efficiencies, one thing goes wrong, that will obviously have a cascading effect.
Correct. So, when you're running that close to the line, you have an issue like a regulatory change that can have an impact. What the company has shown, though, in the past is an ability to adapt and, its management being able to ensure that the business is running as close as possible to the edge without having sustained operational issues. So their market share, whilst it dropped to just below 60 as a result of this, is now back up to 64, 65%.
Now, Mugunthan, of course, at this time, running an airline is incredibly difficult given where those fuel prices are going. So how is that impacting IndiGo?
So what we've seen in the past is every time there are these difficulties, a lot of the other competition in aviation space in India has actually found it difficult, in many cases gone bankrupt. There was a very strong airline 15 years ago called Jet Airways that fell by the wayside. There's talk of a company called SpiceJet that could suffer the same issues today. So IndiGo has shown the ability to keep growing their market share. And when you're looking at an addressable market that could grow for the next 10, 20 years, this company is ideally placed to capitalise.
And Mugunthan, more broadly, when we talk about the effect of fuel prices, the rising oil, the difficulty obviously in accessing oil, particularly for a country like India, what are the effects we're seeing at the moment?
Obviously higher oil prices has an impact on, a weaker currency, their current account deficit, which has remained reasonably contained compared to India as a fragile 5 economy in 2012. But we are seeing, the longer the higher oil price persists, the more difficulty the economy will face. We haven't seen subsidies get passed on, so the government, which has been going through a major state election, has held oil prices the same. So far, any inflationary impact is yet to be felt. But given the conclusion of the election, we do think some of this will start getting passed on. So inflation, which has been quite benign in India, is forecast to rise to about 4.5%, which is still within the central bank's target of 4%. plus or minus 2. But certainly, if the longer this persists, the more difficult it will get.
Yeah, where can they actually source their oil? So those sanctions against Russia have been relaxed. They're going to draw more from Russia?
Well, when you look at the spread of where it's coming from, obviously the Middle East was a significant component. They will have to, get more import from Russia, markets where they can minimise the impact cost of oil.
All right. So just quickly returning then to what we were talking about in terms of airlines, and in particular with a focus there on InterGlobe. Is that a buying opportunity as you see it?
Yeah, and I think one thing we didn't talk about is their focus now on international. So several routes are being put in place where IndiGo can grow into being a global competitor. Most of their airlines were narrow body, but now they're starting to pick up a few more wide bodies with the aim to not just grow from India's rising market, but be able to be a strong carrier globally for Indians.
Mugunthan, thanks for joining us from India Avenue Investment Management.
Thanks, Andrew.
All right, let's now just take a look at where we're likely to open when we get going in just a couple of minutes' time. This is where we closed on Friday in terms of S&P ASX SPI futures, pretty flat, as you can see. They're going to be interesting to see how the market interprets what's going on in the world at the moment. Mind you, as I mentioned at the top of the show there, trade expected to be fairly thin, given half the country is on holidays to observe Anzac Day. Stay with us, the Open, just around the corner.